Hello, today is Friday, June 19th, 2026. Here is your daily signal. According to Fortune, Kevin Warsh's debut as Fed chair was marked by a resolute commitment to price stability and a hawkish tone that unsettled investors. Warsh, a former Federal Reserve governor from 2006 to 2011, shaped post-crisis monetary policy debates, especially advocating for quicker normalization and more hawkish positions, and his influence persists in discussions about asset purchases and inflation targeting. Bloomberg's analysis on June 18 highlighted Warsh's criticism of the Fed's slow inflation response, prompting renewed debate among investors, while Reuters reported Warsh's warning of market volatility if the Fed maintains its easing policy. Key facts include his decisive non-endorsement of Trump's stance, as markets reacted sharply to his leadership, leading to splintered opinions within the FOMC over future hikes. Near-term consequences may include FOMC members reconsidering the pace of rate increases and policy tightening, with medium-term risks of increased volatility and investor sentiment swings if the Fed's messaging stays ambiguous. This ongoing public debate could encourage more transparency and robust discussion around inflation and asset bubble risks. Next, let's turn to global competition in AI exports. According to Fortune, the White House decision to cut off Anthropic's most advanced AI models from non-US access handed European leaders a fresh argument in ongoing technological sovereignty debates. The U.S. government began restricting exports of advanced generative AI systems to foreign entities in early 2024, motivated by concerns over adversaries' misuse and drawing on past semiconductor bans that shaped supply chains and innovation. Reuters reported on June 18 that the U.S. Commerce Department tightened export controls for generative models, citing national security, while Bloomberg noted NVIDIA shares dropped 3% after the news, leading to fears of volatility, and the Financial Times confirmed Chinese companies quickly rerouted investments toward domestic AI. Key stakeholders like NVIDIA, OpenAI, Baidu, and the Commerce Department have responded publicly, with major universities monitoring the broader impact. In the near term, U.S. tech firms risk losing market share in Asia as Chinese firms innovate at home, and medium-term effects include fragmentation of global AI standards, interoperability headaches, and possible coordinated moves by allied nations to mitigate strategic risks. Competitive retaliation may even affect U.S. tech sectors such as quantum computing or cybersecurity. Next, we'll examine the economic impact of AI on SpaceX's revenue trajectory versus Micron. Next big future underscores that SpaceX is poised for rapid revenue growth, mirroring Micron's AI-driven turnaround, with projections suggesting a leap from $1 billion annual AI revenue in April to $33 billion run rate by October 2026. SpaceX, under Elon Musk's leadership, has fast-tracked integration of AI for satellite production and launch scheduling since 2023, while Micron's revenue has fluctuated in response to global AI chip demand. CNBC reported SpaceX's Q2 2026 revenue jumped 10% due to new AI-optimized Starlink logistics, contrasting with Reuters' account of Micron's 6% Q2 revenue drop amid supply chain bottlenecks. Stakeholders such as Musk and Micron CEO Sanjay Mehrotra, along with large institutional investors like Vanguard and BlackRock, are navigating these shifts, while policymakers monitor supply chain resilience. The White House briefing highlighted new AI supply chain security recommendations affecting both companies. SpaceX's continued AI-driven momentum could cement its commercial space and internet dominance over the next year, while Micron faces sustained pressure unless chip bottlenecks ease, impacting investor confidence. Regulatory interventions could alter investment and growth strategies next year, and broader AI adoption across aerospace and chipmaking may spark increased mergers and R&D competition as firms seek a decisive edge. Now, onto the markets. European markets showed mixed performance, with France gaining 1.01% and Italy up 0.73%, while the United Kingdom slipped with a 1% decline. The Netherlands outperformed among major regions, rising 1.4%, while China large cap dropped over 1% on the day and suffered an 8% monthly loss. Japan gained 1.9%, and Taiwan surged by nearly 4.6% in a strong regional rally. Arab Emirates equities stood out, rising 3.77% on the day and 8.4% monthly, while Africa slid by 2.7%. Commodities trading saw gold pull back 0.38% and silver tumble 1.8% today. U.S. oil moved up by 0.56%, while platinum dropped sharply by 1.9%. In agriculture, corn contracted by 1.1%, while uranium gained 1.4%. In U.S. favorites, AMD leapt 4.8% and ARM jumped 4.9%, while Intel soared 10.6% for the biggest daily move. Oracle rose 0.4% and Apple edged higher 0.7%, but Adobe fell slightly by 0.6%. Nvidia advanced 2.9%, Amazon climbed 2.9%, whereas Alibaba lost 0.3% and JD retreated 1.2%. The S&P 500 gained 0.78%. Semiconductors led sector action surging 6.6%, while healthcare and finance both slipped nearly 0.9%. Transportation stocks rose 1.7% and clean energy outpaced with a 5.2% gain. That's it for today. You can find more news and details on our website. Goodbye.